Thanks, Neil. Morning, all. So, my name is Chris Binns. I am Business Development Manager. I am also a Chartered Financial Planner for Moneyweb. This morning, I'm the only person that will be presenting to you on one of the employee benefits that you are able to look at. We've got guest speakers from other providers. That was a very purposeful and specific decision that we made. The area that I'm going to talk to you about is a massive market, and there are numerous different providers available. Being hand on heart, the people that you've got here today are our favoured providers that we work with from a service, cost, and just generally, we think that the overall proposition is right. What I'm going to talk to you about today around group death in service, group critical illness and group income protection, largely, as you'll see, is two different aspects. Number one, without being too blunt about it, death in service, which is life cover, you're either here or you're not here. Therefore, that's very cost driven. Therefore, it'd be unfair for us to get a provider in to talk about their service, because ultimately the service will pay out whether that individual is dead or not, as the case may be. But let me just expand a little bit. So, death in service, what is it? I'm sure a number of you will already have this type of provision as part of your employee benefits. Put very simply, it's a tax-free lump sum that is paid out in the event of one of your employees passing. There's various different permutations and ways that you can actually put this cover in force. The most popular is on a multiple of salary. So you can stipulate and say, look, we'd like an individual who's on £20,000 a year to have a multiple of 2 times, 3 times, 4 times, 5 times of their service paid out in the event of their passing. You can also break it down and provide different levels of cover for different people within your business, which I know when I'm speaking to my clients, a number of you are here today, it's one of the things that I talk about. You probably want to think about rewarding your senior managers, perhaps your directors, the people who have, say, control, influence, who are much more difficult to replace, and you'd like to afford them a higher level of cover than perhaps someone who still does a great job but is more replaceable and quicker to get that individual in. One of the key things in death in service cover is making sure it is as simple as possible for every business. And when we talk about simplicity, really all we're talking about is one touch point per calendar year with us as a company. So what does that look like? Well, to start with, we'd obviously set cover up. 12 months time, that's our next touch point. Well, actually, it's about 10 and a half months, because we want to be speaking to you about 6 weeks before renewal. And at that point, what we are doing is we're checking to make sure, have there been any changes in terms of people that are employed within your business and also salary levels. The beauty of that is, during that whole time period from when the policy is set up to policy renewal, you can have people coming and going, people joining, people leaving. It does not matter. As long as a contract of employment and you've made us aware that's how you want it to be set up, you don't need to be picking up the phone or dropping us an email every 2 minutes to say, so-and-so's left, so-and-so's joined, somebody's had a pay rise, someone's had a pay cut. Individuals are automatically covered from day one, and if there's any changes that are made, we don't need to know. The insurance company doesn't need to know. All that happens at the renewal point, there is a sweeping up exercise. So if you started off and you had 100 employees and the premium was based on that, and by the end of the year you now had 120 and 20 had joined bang on 6 months into that, there'd be proportionate additional premium payable. So it's a really simple way to make sure that you've got people who are covered from day dot, the minute that they join. Equally, if you've got people who leave, you'll also get that rebate back, so you're not paying for someone who isn't covered. Income protection works very similar in terms of the tax side of things. So unlike death in service, which is a lump sum tax-free in the event of passing, this is a tax-free regular income if someone is unable to attend work due to long-term illness. We're in quite a fortunate position, our business. We deal with predominantly relatively affluent, well-off individuals who have got money in the bank. If they had a period of sustained inability to work, they've probably got the cash that they can go to and use and plug that income gap if they didn't have this type of cover. the question I'd ask, and you know your business is better than anybody, if you think about the demographic of your business, if someone was off for 2, 3, 4, 5, 6 months, what sick pay arrangements do you have? How long would they be able to keep on putting food on the table, paying the mortgage, the gas, the council tax, the electric, everything else that needs paying? I'd hazard a guess, for the vast majority of people, they probably scrape by for 3 or 4 months. Then it's credit cards, then it's loans, then it's friends, family helping out. What income protection is designed to do is remove all that headache and worry. So if an individual is in an unfortunate position that they can't attend work due to illness, this type of policy kicks in and pays them a tax-free regular income until they're able to return back to work, or until their stated retirement age if it's structured in such a way. So it gives absolute peace of mind at a time when someone is going through what is typically quite a stressful time anyway because of their health. This removes the financial burden. Lastly, group critical illness. So works very similar to the other two policies, but it does what it says on the tin, which is this is paying out in the event of someone suffering and being diagnosed with a critical illness. So life cover is life cover, the death in service. Income protection is someone not being able to work due to long-term illness. This could be a case that someone is still able to work, but has been diagnosed with cancer, heart attack, they've had a stroke, whatever it is. And again, it's a tax-free lump sum that's paid out. We tend to structure it in a very similar way to death in service, where we work on a multiple of salary. That's what most people would say. And it's designed to provide a lump sum of money that that individual can do what the hell they want with. So they can use that money to, they could say, well, actually, you know what? I want to pay my mortgage off. They might be in a position where, unfortunately, they haven't spoken to us, they haven't had a product like Neil's offering, therefore they don't have access to private medical, and what they want to do is jump the NHS queue and pay for private treatment. It's their money. They can do what they want. No one's going to stipulate it. On all the three products, I think it's really important to note, I've been in the industry now for 28 years, and the common objection I get is, well, these are all insurance companies. They're all thieves. They're not going to pay out in the event of these claims. That's utter nonsense. I won't embarrass or, from a data protection point of view, share anything in the room, but there's one business here who, in the last 6 months, has had a claim for death in service that we've paid out, well, we haven't, but the insurer has paid out on. I've got a client who is currently just had the payout for critical illness. These things pay out. Insurance companies these days, they're not ones to try and duck out of it. If it is a genuine claim, if there is the cover's there, they pay out, and it's really worthwhile. So when we look at life cover, as I say, it would have been massively unfair for us to invite just one of the insurers down to talk today, because fundamentally life cover is life cover. You're either here or you're not here. Yes, but actually, very similar to what you've already heard from Neil, lots of the companies that we deal with now actually bolt on additional peripheral benefits to the main cover. So if we're talking about life cover and death in service as the prime example, the primary benefit is if that individual dies, it's going to pay out a lump sum free of tax to the beneficiary's family. However, what a number of providers now have are lots of peripheral benefits that sit alongside their policies as standard. Some don't. So it's choice for you as employers, whether you just want something that is, I don't want to use the term basic, but it does its job. It pays out life cover in the event of a claim. It pays out critical illness cover, pays out income protection, or whether actually you would like to look at some of the peripheral benefits. And I only mention that because there'll be a number of you in this room who have already got some of the cover that I've talked about. It'd be an ideal opportunity when your renewal comes to actually say, you know what, can you have a look at not only from a cost point of view what the renewal would be, but actually, I remember Chris saying that there's other benefits, and we're quite interested to hear from some of the other providers to see whether there is some of the additional bolt-ons that we can add. So things like Tooth Fairy is a prime example. I'm really lucky. I've got an NHS dentist. happens to be one of my mates and also one of my clients. So I've got his mobile number. If I have a problem, I've got awful toothache at the moment, I'm dosed up on antibiotics. Not a problem at all. I texted him on Friday. Antibiotics are sitting at the dentist reception about 2 hours later for me to collect. Not a problem at all. Most people can't afford that luxury. So something like Tooth Fairy is dentistry on demand. That is an additional benefit that is attached to some of the types of cover. So when we say life cover's life cover, not quite. So just expanding on those a little bit, just going back a slide. So things like 24 access to health and well-being. So you've got all sorts of different benefits that you can build in. And this is just one provider that we deal with. This is Canada Life, actually, out of example. These guys offer a fantastic product with all the additional benefits that sit alongside there. I look at that and actually I could probably do with about half a dozen of those myself at this moment in time. Things like healthy diet at work and diet support and different bits and bobs. But that's all built in, and it's built in as standard. Tooth Fairy I've touched on. It's great. It's really, really simple. Members can literally pick up the phone. They can instantly speak to a dentist, get diagnosed with what the problem is, and then get sorted and seen very, very quickly if they wish to do so. My strength, I'm sure it's becoming more and more prevalent these days, it certainly is, in terms of making sure from a mental health and well-being perspective this is covered. And again, this is one of the additional benefits that is built in as standard. The second medical opinion is extremely worthwhile. Second medical opinion is when someone has been diagnosed as suffering from something not particularly nice and they've effectively been told there's no solution or cure. The second medical opinion service will then actually do exactly what it says on the tin. It will look outside of the UK, it will look outside some of the prescribed and agreed treatments that are only available in the UK, and it'll look overseas. There are lots of different things and different trials and different medical views outside of the UK. And what this would do is say, well, actually, you've been diagnosed as this, the NHS have told you X, and there's no cure. Actually, over in America, there's this going on, and that would be an option then. Bereavement counselling built in. Obviously, we know exactly what that is. So when we say that life cover is life cover, it really isn't quite as black and white as that. Yes, if you're looking for a great policy that does exactly what it needs to do, would pay out in the event of a claim, there are umpteen different providers that we can go to. If actually from a cost point of view, cost isn't the driver and what you're looking for is quality of cover, then I'd really encourage you either at the point of renewal or if it's something that you're thinking about implementing to actually flag that and say, look, please look at the wider market as well. That's everything from me. Thank you for your time. I hope you've enjoyed the first two presenters today. We've got two more fantastic presenters to come. Without further ado, I'll hand you over to Rachel.